So joining us now is Caroline Woods, senior markets correspondent for the network. Caroline, I am sure that you have discussed this name at length already today, but there's a reason we talk it. One of the biggest companies in the world. So walk us through the expectations here.
Hey there, Jenny. Microsoft is actually the best performing Mag 7 stock so far this year. It's still down, about 7.5% year to date, which just really shows the weakness that we've been seeing in terms of the mega cap tech stocks. But I do think that's notable. In a note earlier this week, Jefferies actually pointed out that the setup is de-risked for Microsoft with its multiple compressing. What it says is about 13% since that fiscal Q2 print. That number has updated a bit now over the past few days, but it is. It has seen some weakness. If you take a look, it's down about 16% from the highs that it reached, last year. In terms of what we're expecting from these results, adjusted EPS of $3.20 on revenue of $68.38 billion. That's about 10.5%, 10.6% growth over the previous year, which would actually be its slowest rate in about 2 years. If you break it down into some of the businesses, revenue for productivity and business is expected to be up 51% to $29.63 billion. Intelligent cloud down about 2% to $26.1 billion. And then more personal computing down about 19% to $12.64 billion. So that will continue to be a weak spot according to analyst estimates. Of course, on the CapEx front, Microsoft has committed some $80 billion in capital spending for AI. So investors will really want to get a sense, or an update on how those AI investments are driving growth in Azure and in its Microsoft 365 products. Also some integration updates on the AI front. In terms of the outlook for the current quarter, Wall Street analysts looking for EPS of $3.28 on revenue of about $72 billion. That would be up 11% over the previous year. I will say earlier this month, Dan Ives over at Wedbush did lower his price target on Microsoft to $475 and said this in a note. We estimate that 10 to 15%, which could be conservative, of many cloud and AI initiatives in the U.S. we are tracking in the field could be pushed or slowed down during this period of uncertainty, and Microsoft will be front and center in this economic period of uncertainty. So any commentary in terms of how they're kind of weathering the uncertainty with trade tensions and with tariffs, I think will be very important and very closely watched. I will say Dan Ives did keep an outperform rating despite that lowered price target. And if you take a look, 88% of analysts have a buy rating on Microsoft heading into this report. The median price target is $480, which implies more than 20% upside from current levels. And as I said, it's down about 16% from the highs. So I think that analysts on the whole see this stock getting back to those highs and then some. Not necessarily seeing it today with shares down a little less than 1% right now. Still higher on the month though, up about 4% this month. And we'll see. There's a lot of pressure on big tech this week to kind of figure out if they can carry this market and kind of regain their leadership position. TBD.
I know, and I think it's been kind of incredible, like you said, the outperformance of Microsoft. I mean, not really outperformance, but just maybe the solid footing it's seen and attempting to now stand on into this report. Although lower today, I just think Microsoft oftentimes it's overlooked because we just talk about Azure, but there's so many other aspects of their business. Like you said, Office 365, Xbox, LinkedIn. I mean, it's such a good read on so many different aspects of tech that I do love tuning into this earnings call because I always think it's so well done. But we will leave it there for Microsoft, and I'm sure we'll be revisiting at some point today ahead of these numbers. But appreciate it as always, Caroline Woods.